you start, the more time your investments have to increase in value. If you want to make money, you have to think long-term. Cool short-term things like cars and electronics, they look good at first, but they don't hold their value. So start building your long-term wealth by investing in long-term money makers. You see, I don't want you to wind up like my friend Jeff. I remember back when we were teenagers.
Hey man, I'm 18 years old. I'm living for today. Investing's for old people in their 40s.
Hey man, were you just in my van, bro? This was the coolest thing on the road back in 1981. Yes, Jeff, but now you live in it.
Okay. Thank you so much, Sichoni, for that. Welcome once again to today's town hall. If you're just joining us, please feel free and welcome to today's town hall. My name is Tidale Mwale. I'll be your host for today. Our presenter for today is Mr. Nonde Sichilima, who will give us a perspective from the regulators on how one can participate in investing in shares. And then we'll have a perspective from the market. This will be given by Mr. Joseph Mazila, who is a representative of CMAZ, which is the Capital Markets Association of Zambia. Okay, so to start our presentation, I will just turn off the video and allow Mr. Nonde to start his presentation. A few just housekeeping rules. Please keep your mics on mute, or since you are attendees, you actually will only be able to participate once we allow you, which is at the end of the two presentations. You'll be able to raise your hands or unmute your mic and ask the questions after the two presenters are done. Mr. Nonde, over to you.
Good afternoon. Thank you, Tidale, for that introduction. I'll just turn on my camera briefly, just so that people can see who's presenting, but then I'll also start sharing my presentation. I just confirm if you're able to see my presentation.
Not yet.
Nothing yet, huh?
No, nothing.
How about now?
Okay, we can see it. You can just put it in slide form.
Okay. Okay, just to save bandwidth, I'll turn off my video and then we can get into our presentation. So thank you so much for making time to spend some time with us to learn about capital markets and the work that we do as the Securities and Exchange Commission. We designed this platform as a means of us interacting with you, our members of the public, to tell us about ourselves and also to answer any questions or concerns that you may have about the subject matter, or indeed any other issue that that may be burning on your mind. So this, just to mention that this is actually a series of presentations that we've prepared for our stakeholders, just to highlight the investment options that you have when you want to invest in capital markets. So today we are looking at investing in shares, and then in September, last Thursday of September, someone will come and speak to us about investing in collective investment schemes, or unit trusts, or mutual funds, as they are commonly known. In October, we'll then look at investing in bonds and other products. So please just keep those in mind. Last Thursday of September, October, we'll have presentations on those two products, on those other investment options. Going to the topic of the day, since just in case we may have people that are new to capital markets and the Securities and Exchange Commission, we just thought we just do a really high level introduction in terms of who we are. We're a statutory body established in 1993, and under the Securities Act, we still exist under the Securities Act, but it's a new one of number 41 of 2016. We just enhanced our regulatory rules and gave us more, increased our mandate so that we are better able to protect investors in capital markets. We have a dual mandate. Firstly, is protection of the interests of investors in the capital markets, but it's also to ensure development of capital markets. The activity that we are doing today actually covers both of these, because in protecting investors, we want you to be aware of the products that are there and your rights under those products. But the other side is in making you aware, we hope that you will then be encouraged to come to capital markets, either to look for funding or to look for investments. Okay. So how do we do this? So some of the things that we do is we prescribe what is known as a regulatory framework. So basically, how do we do our day-to-day work in ensuring that investors are protected, or that the people that work in capital markets are not doing anything that is harmful to members of the public. So we do this by establishing rules and regulations for that govern issuance, trading, and disclosures in terms of securities that are issued under our regulatory ambit. We also look at disclosure requirements. So one thing that you notice when you come to capital markets is that we are very heavy in terms of what an investor is told before they invest in any product. What are the investors told once they've bought a capital market instrument? And what are the investors told when they want to leave or sell their investment in capital markets? So there's a lot of disclosures. Basically, the issue is whatever bad news or good news surrounds your product, the service providers or the person issuing that instrument has an obligation to tell you, so that as an investor, you're making informed decisions. The other thing that we do is we enforce laws. So like in every system in society, inevitably someone decides to disobey the rules and regulations that have been put in place. So someone then has to make sure that that person or persons are brought to account. Action is taken against them to make sure that first of all they become compliant with the laws of society, but also if there's any harm that's been perpetrated, where possible, investors are recompensed for the bad actions of those people. But we do this to protect investors and also to make sure that our markets, our capital markets, function the way that they are supposed to be. The other thing that we do is investor education. So this town hall is an example of how we do investor education, where we undertake initiatives to educate investors about the risks and rewards associated with investing in shares or any other securities that fall within our ambit. So the motto that we have as the Commission is the first layer of investor protection is the investor themselves. The moment you see that that something is wrong, you'll be the first person to actually know that something has gone wrong, and you then alert somebody. In this case, you'll be alerting the Commission or somebody who is able to take action on what has gone wrong. So this is, for us, we always say the investor education is the first layer of investor protection. It's the same way that if you look at our communities where we live, the police station might be somewhere like 10 kilometers away from where you are, but the police will only become aware that there's a string of robberies in your area if you actually call them and say, no, we've seen suspicious characters moving around this neighborhood. Then the police will know that, okay, perhaps we need to send patrols in that area. So similarly, with investor education, our members of the public, once you become educated about shares that are available, it becomes the first layer of defense. So again, we list some of the things that we do in terms of how we facilitate public investment. So we do registration of securities. So this is just companies that want to raise finance, and we offer opportunities for them to use capital markets instruments, be it shares, issuance of units, and so on. So we make sure that whoever is offering a security in capital markets, that security is authorized by ourselves before it's offered to any members of the public. So this is basically like doing a due diligence, or just making sure that these securities are actually safe to be offered to members of the public. So we do a lot of work in terms of interrogating these individuals that want to offer these securities to members of the public, for us to satisfy ourselves that they're actually safe to be offered on our market. Once these securities have been offered to members of the public, and the public have invested in them, and the companies have used the money for what they intended to do, we undertake market surveillance. And all we are doing with market surveillance is to surveil the market, or look around in the market to make sure that the issuers of these securities, the market players in the market, and everyone else is not doing anything that is harmful to investors' interests. So things like looking out for complaints from investors or other people who are seeing some things that are going wrong, and actually investigating, form part of our market surveillance activities. So a lot of the wrong things that we do actually come from our market surveillance activities. We also license. So you can imagine whoever is selling shares, whoever is a financial service provider, as they are commonly known, or capital markets operator who is selling these shares to members of the public, we have to make sure that they are properly licensed, and that their employees are actually fit and proper to offer these services to members of the public. So we do licensing, and we also regulate market players that are doing work in the public space. I did speak to market development. So market development is the mandate of the Commission in terms of ensuring that we are developing capital markets, so that then it becomes the marketplace for people who are looking for investment options, and also for people who are looking for funding. So the aim really of investor education is basically to empower investors. So one thing that we've done in the past is to undertake comprehensive investor awareness campaigns. And what you see this translating into is you see us attending public events such as your agriculture and commercial shows. You see us setting up a stand there and giving out literature, explaining to people what we do. You see us at the malls when we have events such as World Investor Week, Financial Literacy Week. You see us or hear about us on TV and radio and television, because we are trying to reach out to as many people as possible to just, first of all, encourage them to invest in capital markets. Once they are investors, we are also trying to send out alerts to them, ensure that they know what their rights are, they know how to protect themselves, they know how to alert us if they see any wrongdoing on capital markets. And by doing that, we believe that we are then empowering investors to maximize on their investment by using capital markets in the right way. I'm trying to, sorry, I can see there's a hand raised from by Mulenga Simfupe. But could I ask that maybe we leave the questions to the end? We do have a question and answer session. I think everyone will be given an opportunity to ask any questions. I don't know, Mlenga, if that's okay. 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 Thanks, Dali. I've got the thumbs up from Stali. So moving on to the topic of the day. So we're talking about shares. And really the question is what are shares? And basically what we're saying is a share is a part ownership of a company. So if I give an example of the company that any company that we are all familiar with, for example, if I said Zambif. So if I said I have a share in Zambif, it means that out of the thousands of people that own Zambif, I'm one of those people that are owners of that company. So a share is just your participatory interest in a company that you have together with other people that also have ownership in that company. Okay. Okay. So like I said, so shares just represent your almost like your stake in a company in the same way that you own a house. So for public companies, what it means is you are not the only one that has a share in that company or ownership in that company. You, together with hundreds of other people or thousands of other people, you all have a claim to the company, depending on the number of shares that you have in that company. And what shares do is they entitle you to the rewards and also the risks of owning shares in that company. So what I mean by that is you get rewarded when the company does well, in that you get dividends, which are like profits, a share of the profits of the company. Also, when the company does well, it means that the value of that company also goes up. So if you bought, for example, your company, your share at 10 kwacha at the beginning of the year, by the end of the year, if the value of that company goes up to 20 kwacha, it means that the value of your share has gone up 10 kwacha. So you no longer be saying that I have 10 kwacha in a company, but at the end of the year, you'll be saying, I now have 10 kwacha worth of investments in a company. What that also means is when you sell at a point where the value of your shares have gone up, it means that you also make a profit on your investment. The downside, like anything that under the sun, is that there's a risk to everything you do. So if the company doesn't do well, you have COVID, you have other things that happen in the economy, it means that maybe the company may not do so well, so you don't get as much profits, your dividends will be lower. Or in the worst case scenario, your company goes out of business, then everybody loses their money. And if you're not lucky, you might you probably have to wait for everyone else to get their money before you do, because you're a shareholder in that company. So there are upsides and downsides to owning shares in a company. But why do companies issue shares? So the primary reason companies issue shares is to raise money. So you can imagine if you have a bright business idea and you don't have enough money, you then go to your friends, your relatives to try and get money from them. And in most instances, they'll give you depending on how they trust you. So it's the same thing that companies do. When they have a project or they want to grow their business, they won't have enough money. But if they asked 100 people more from members of the public, they will then be able to raise that money, and they will pump that money projects that will then make profits for the company. And when the profits are made, then they will share that to shareholders for as dividends. Then why should you invest in shares? So shares really represents a long-term investments. So the advice that we normally get from professionals in the field is that if you are looking for long-term investments, shares are one of the options, because you do not buy shares, for example, to address a short-term need, something that you need to do in a month or 3 months. They are really long-term. You're looking at periods of 5 years plus, because over time, shares generally appreciate in value. So meaning that your investment over a long period of time will inevitably always increase in value, despite the risks that I talked about. So that's the primary reason why people invest in shares. So, for example, if you want to invest, for example, to invest for your children's education, your 1-year-old child now, but you're thinking of them going to college in 10, 15 years time, inevitably shares will be one of the options that your investment advisor will put on the table in terms of assets that you can invest in, because over time you see capital growth in those. The other reason people invest in shares is they just want dividend income. So you may have done your research, and what you realize is company X, some of them pay dividends as frequently as every quarter. So you may just want to say, I want to be getting a share of that dividend. So you could also invest in shares, and you'll be enjoying that dividend every quarter, every half yearly, or every year. So there are various reasons why people invest in shares, and the type of shares you invest in really depends on how your service provider will profile you, so that then you are buying the shares for the right reasons, and you're buying the right set of shares from the market. So that's just a high level view in terms of how the share trading process happens. So if you want to buy shares, we've invited someone from the market who does this as a way of earning their living. So I won't really delve too much into this. I'll leave it to Joseph, I believe, who's going to present. I thought I'll also just share with you that the concepts I'm talking about, there are actually shares available on the market from companies that are familiar to all of us here. So I've listed the logos for all the companies I believe are listed on the Lusaka Securities Exchange, and their companies, a lot of them are household names. So you've got the banks, Zanaco, Standard Chartered is listed. So if you're interested in buying shares in banking stocks, those are some of your options. We've got Taj Pamozi Hotel, the hotel that's along at Zababa. If you're interested in getting a share of the revenues that they make from their hoteling business. So really, these concepts I'm talking about, the shares I'm talking about, they're actually available for any member of the public who's interested in investing in them. Joseph, who's speaking right after me, will speak more in terms of how you gain access to these shares and become a shareholder in these companies, and how you benefit from the economic activities that these companies are engaging in. I hope with those few slides, I've been able to sort of demystify what shares are, what opportunities you have in there, why you should invest in shares, in terms of what sort of downsides you should always be aware of. So everything you invest in capital markets, or even outside capital markets, you should always look out for what is the downside. And in making the best out of your investments, it's really how you manage the downside. I'll end here and just give an opportunity to Joseph to present. Stali, over to you.
Okay, thank you so much, Mr. Nonde. That was very insightful and very interesting. We'll now hand over to Joseph to now take us through how can one participate? How am I as a layman, for example, or me as an individual, how am I able to participate? How do I buy shares? Joseph? So after Joseph is done, we will now open up the floor for questions and contributions. So if you have a pending question right now, a pressing question, you can just type it in the chat function and your question will be attended to in there or in the Q&A section. Joseph, over to you.
Thank you, Study. Please confirm if I'm audible.
Yes, you are. We can
Thank you.
share your screen now.
All right.
Joseph, do you have some slides to share with us?
Yes, please. I'm just sharing my screen now.
Okay.
Yeah. You can
Okay, so while Joseph is just preparing to share his screen, I just thought I mentioned that we're also live on Facebook. So if you've got any comments or if you've joined us via Facebook, thank you for joining us. If you've got comments, you can also post your comments and questions there. We'll be able to attend to them. Okay, you can start, Joseph. Thank you.
Are you able to see my screen?
Yes.
Okay. All right. So
you can just put it in a slide form, a presentation form. Yes.
Okay.
All right.
Yeah. So basically, I'm coming from the Capital Markets Association of Zambia. I'm sure I've already been introduced. I work in the capital markets, and I'm a representative of the Capital Markets Association of Zambia board. So just a quick high-level, introduction of the Capital Markets Association of Zambia. We basically promote the capital markets through policy advocacy, dialogue, lobbying, standard setting, and information dissemination. And we also seek to drive increased participation within the capital markets, and also basically deal with investors, securities in both primary and secondary markets. We also foster dialogue and relationships between the capital market participants and the regulators, which is the Securities and Exchange Commission. Mr. Sichilima, I think, has spoken very well about what a share is. I think what I would just love to add is probably people have heard of, people owning equity in companies, and how does that happen? That's what we'll talk about. But basically, on the other side, there are situations where people have been approached and say, we owe you money by a company. I say this company is owing you money, but maybe they can't afford to pay you. And they decide to say that we are going to convert your debt to equity. So basically what they are saying is they are going to give you shares in that company, and you become part owner of that company. So that's just some other information that I wanted to share. Yeah, so obviously we want to know about how we can invest and what companies. Mr. Sichilima made it clear and showed us some of the companies that are listed on the Lusaka Securities Exchange. So the LUSE has about 25 listed companies, and this is the market that provides access to the stocks. So through the Lusaka Securities Exchange, you will be able to buy stocks in any of the listed companies, provided those companies are available. And The listing happens when there's a company interested in going public. So we've heard of companies that are called public limited companies or PLCs. So these are companies that are mostly listed on the Saka Securities Exchange, because then they wish to raise capital, like Mr. Sichilima mentioned. So they are offering their shares of that company to the public to buy and invest in that company. So how can you invest in shares? So the first thing to do is to open a brokerage account. This account is going to be held on the LUSE, Central Securities Depository, which will help or facilitate the buying and the selling of your shares. So this account is going to be opened through a stockbroker. These stockbrokers happen to be institutions or individuals who act as intermediaries between the Saka Securities Exchange and the investors. When you go through a broker, because they're not going to do this to buy and sell these shares for free, they will charge you a fee or a commission for buying and selling these shares. So you're going to give them an order, and upon them executing the trade, you will have to pay that fee to the broker. So to open a brokerage account, there is standard KYC, which is required, and this is the normal KYC that we normally get to provide even when we are opening a bank account. So this is the passport size photos, your proof of residence. They also require the proof of source of funds and a copy of your ID. So some of these requirements basically are for protection. In this market, we are trading in a regulated market. So the Securities and Exchange Commission are the regulators, and we follow rules when we are operating as capital market operators. So these are guidelines for which will help us to know the kind of customers that we are dealing with. So when we invest in shares, obviously you'd say they're talking about shares, but how do I benefit? So basically, you become part owner of that company. So basically by being a part owner of the company, it means for whatever business that the company undertakes, you have to get a benefit because you would have invested your money. So practically how it works is that when you buy these shares, it's like a friend has a kantemba and tells you that can you give me money to buy a certain goods? So you add money. So the sale of those goods that the person is going to, the proceeds from the sale of those goods, you have to share those profits. So these are the dividends that are shared to the investors. So when you buy shares, you're excuse me, you are entitled to a dividend. But then these dividends are not paid out, or rather I would say they are not guaranteed. So this depends on the performance of the company. If the company makes a loss, obviously you will not expect to receive a dividend. But if the company makes a profit, and depending on their dividend policy, some companies would pay 100% dividend, and all the investors, depending on how many shares you have and the percentage of ownership, that is the allocation that you are going to receive as a dividend. The good thing is that when you are investing excuse me, with through the LUSE, these companies are also regulated. By virtue of them being listed on the LUSE, they are following the rules of the regulators. So there's transparency, and all information is disclosed. So that disclosure that Mr. Sichilima was talking about also applies and protects all the investors. So you find that at the point that a dividend is declared, there is going to be notices that will go to all the investors, and you will know what to expect at the point that there's a payout. Then the other benefit is that there's a capital gain. So these capital gains are as a result of the price movements. When these shares are trading on the LUSE on a daily basis, there is buying and selling. So this is the secondary market. So those people that are going to buy, if you decide to invest tomorrow, you are going to buy shares from people who already own shares on the LUSE or in these listed companies. So your broker is going to buy the shares for you. That is why they will charge you a fee. But then as their brokers are trading, there is a movement. So those that, the investors that already have shares and wish to sell, they'll put up a price. Of course, those prices are, I would say, there's a cap at how much you can wish to sell your shares. So when they say, let's say, for example, shares in Zanaco today are going at 2 kwacha 13 ngwe. That's just for an example. If I own shares in Zanaco and I want to sell 1,000 shares, I would say I want to sell at 2.5. Instead of 2 kwacha 30, I'll sell at 2 kwacha 50. So I'll wait for a buyer who is willing to buy at that price. So if the trade goes from 2.3, if my order goes through, my sell order goes through, then what will happen is that the price of the shares will go up. Of course, what will make the price go up, there's a number of shares that would influence the price to go up. So if that my trade is within the number or the amount that would force the price to go up, then it means the share price has gone up. So every other person that comes to sell at a higher price, if they bought at 1 kwacha and now the price is 2.5 and they want to sell at 2.5, the moment they sell, it means they've made a capital gain. It's a similar situation when we are trading normally. Say we're selling ball pens. We go to Kamwala, we order pens at each pen at, let's say, 1 kwacha, and I come to my shop and I'm selling at 3 kwacha 1. It means the capital gain is 2 kwacha because then I'm making a profit in that sale. Of course, there are also losses. Like Mr. Sichilima mentioned, there are risks, of course. So there's also capital losses where when the price goes down, if you sell your shares, it means you would have made a loss. But the good part is these investments are long-term. So if you hold those shares, you will still have a chance to recover. The only loss will come in when you sell the shares. And the other part is that you have a voting right. So this means that basically all decisions that the company makes, you have an opportunity to also contribute. You also have an opportunity to attend the annual general meetings that these listed companies would call, and you can contribute and get any benefits that come from those meetings. So like I mentioned, the risk, so this disclaimer basically speaks to the risk of investing in shares. So when you go to any stockbroker and wish to trade in shares, they will advise you that the risk that you're going to undertake is the movement in shares. You can buy shares today and tomorrow the price goes down. But what we normally advise is for members to understand that these investments are long-term investments, and the moment they cash out or sell their shares, that is when they have made the loss. But they can see the loss on paper or the drop in the share price on paper, but then as long as they don't sell, they have an opportunity to recover. Well, basically, looking at the time, that marks the end of my presentation.
Thank you so much, Joseph, for that lovely presentation. I'm pretty sure this has shed more light about how one can invest in shares and participate on the capital market. We have a number of questions and a number of hands, so we'll now open up the floor to our questions from the public to our presenters. I'll start with the questions that we have in the chat. Joseph, you did mention that the brokers charge a commission. So Victor is asking, how expensive are the services of this broker? Are they the same, or does it vary from broker to broker? Could you shed more light on that?
Thank you very much, Stanley. And Victor, thank you very much for that very important question. Well, the services of the brokers are not very expensive. But of course, the charges vary from broker to broker. But then there are rules. I stand corrected. That's that you can guide. I think there is a cap of how much you can charge. There's a certain range where you can end for these charges. From the, I think sometime back, I would remember that one broker was charging for a trade which is between, let's say, 1 kwacha to 1,200 kwacha. They were charging a flat fee of about 16 kwacha 15 ngwe. And for any amount above that, there was a percentage. So I should think that percentage is still the one that is being charged, which is a 1.375%. But others would maybe charge slightly higher. But mostly, you would be able to pay a 1.375% of the value of the trade. So if you are buying shares for, let's say, 5,000 kwacha, you're going to pay a commission of a 1.375%, which you can either pay, you can calculate and add, or it can be deducted from the trade.
Okay, thank you so much, Joseph, for that. Victor, I hope that answers your question. We have another question from Moira Kayanda. He's asking if, is there a minimum number of shares that one requires? Let's say if you're a shareholder to participate in an AGM. Let's say a company has 1,000 owners, 1,000 shareholders. Will all of them be required to attend the AGM? Or is there a minimum number of shares you need? Joseph?
Well, Mwelwa, to answer your question, simply I would say if you're a shareholder, it means you are in the what we call the holders of records. So you will still be invited to attend the AGM. The only disadvantage is that your percentage of ownership might be affected in terms of voting rights, but still you will be invited to attend the AGM because you are a member and you are listed as a part owner of that company. So when you say the company has 1,000 owners, Well, basically, what I can say is that they are not going to look at how many shares you have, but they'll just look at the records to say how many shareholders. So you'll be categorized to say these are the minority shareholders and these are the majority shareholders, and then you'll be bunched up in a group.
Okay. Perfect. Thank you, Joseph. Tepa is asking, can someone living the diaspora buy shares in companies within the country? How does one go about buying shares on the exchange if you're in the diaspora, if you're outside Zambia?
Yes, someone can buy shares regardless of your jurisdiction. You just engage a broker and find ways of transacting. So these payments, obviously what's important is for you to have a brokerage account, and then you will be giving instructions to your broker to buy the shares on your behalf. So it is very possible for you to invest in shares because you're going to be transacting with your broker, and they will be giving you what we call contract notes. So you'll be monitoring, you'll be getting reports of how many shares you have, and they'll be giving you statements. So it is actually a good thing because most of the people that live in the diaspora would think that it's quite difficult because maybe they want to, they would be required to go to the offices and trade. At this time of technology, you can be sending emails and receiving reports. Yeah.
Yeah.
I also just wanted to,
yes, Mr. Nonde, please go ahead.
Yeah, I also just wanted to add that I think with the onset of COVID, I think COVID taught us a lot of things about using technology. So what we've seen come up on the Zambian market is that a lot of these listed companies are actually having hybrid AGMs. So they'll have a physical AGM at Pamozi, Intercontinental, or wherever they choose to have it. But they'll also have a virtual option where people in the diaspora can then log in and actually vote, because the voting is also been made electronic as well in a lot of instances. Some of the AGMs we've actually attended, you find that even the voting has also been digitized such that it doesn't matter whether you're physically in the AGM or you're attending virtually, but you are able to cast your vote. So for me, that is quite exciting because it means someone in the diaspora can actually buy shares, can actually participate in making key decisions for the company by attending the AGM. They can even ask questions at the AGM because all they need is an internet connection from wherever they are out there, and they'll be able to participate in the AGM. And it won't matter whether you've got one share in that company or 2 shares or 10% of the company. That is your shareholder right to attend the AGM. Thank you.
Yeah. Okay, thank you so much, Mr. Nonde. And maybe just to add as well, so the same way we have people in the diaspora owning a bank account within the country, it's the same way you can own a brokerage account that Joseph mentioned. And then Mwela goes on to ask, what is the difference between LUSE and SEC?
Okay, I can take that one.
You can take that one. Yes.
Yeah. So I think the nearest example I can give is say Bank of Zambia and a bank such as, if I pick any of the banks, Standard Chartered. So Standard Chartered is regulated by the Bank of Zambia. So in place of the Bank of Zambia for capital markets, you have the Securities and Exchange Commission, who are the regulator of the capital markets in Zambia. Then in place of Standard Chartered, which is a bank that's regulated by the central bank, we have the LUSE, we have the brokers that Joseph spoke about. We've got financial advisors, we've got credit rating. All these are market players that we regulate and they play in the capital markets. So the difference really is SEC is the regulator and LUSE is a market player. And the type of market player that the LUSE is they operate a market for the buying and selling of shares, which is the topic that we are talking about today. So for you to buy shares in any of the companies that I showed you there, the only place you can find those shares available for buying is on the LUSE, which is regulated by the Securities and Exchange Commission. So it's the same way if you want to buy, say, tomatoes, whatever, you know that to find those products, either you go to Soweto market, you go to Chisokoni market, or you go to a shopping mall where you know those products are found. So the LUSE is a marketplace for the buying and selling of shares. And the SEC is the regulator that makes sure that the LUSE and all the other players around that market are complying with the rules, that investors are protected, and so on and so forth. I hope that answers your question, Mwerwa.
Okay, Mola goes on to add, Mr. Nonde, maybe you can also take this one. Why does SEC involve agents, that's the brokers, other than allowing investors to deal with listed companies directly? Mola feels the agency fees plus taxes reduces the investor's return.
Okay, thank you, Mwerwa. And I hope we do have some of the stockbrokers, because that's the kind of feedback that we would also want our market players to also be hearing for themselves in terms of the cost of offering these services to members of the public. Suffice to say that the reason we have the model that we currently have is in financial services, generally, you have what is called financial intermediation. So you've got a pooling of funds and you've got someone that intermediates between people that have got excess money, if I can put it that way, and people that need money. And we are talking about literally thousands of individuals that would need to talk to each other for that money to exchange hands. But for that to be done in a very organized way, that's why you have intermediaries. And these are people who then talk to the people that have surplus funds and pool them, similar to the way your banking sector works. The banking sector collects money from thousands or millions of people, and these end up as deposits that sit within the bank, and then they are on lent to individuals out there that are looking for financing. Similarly, with the buying and selling of shares, it's an intermediation model, because you've got people that are holding on to shares, but they would want to sell them to thousands of other people that are also looking to buy those shares, but they will never find a mechanism of talking to each other directly. And the stockbrokers then play that critical role of intermediating to make sure that they collect the orders, put them in a basket, as it were, and that almost like at the same time inform the people that are trying to buy shares and say, this is what is available for you if you want to buy. So that's the reason why you don't have me going and knocking on the door of Zambif and saying, I want to buy 10 shares. I barely have to go to Joseph and his colleagues and say, you are a stockbroker, I want to open an account, I want Zambif shares, I want Standard shares, I want Pamozi shares, I want this and that shares. And that makes it very easy for me. I only have to go to one place as opposed to knocking to 25 doors for me to get shares. So that's the model that we currently have. The only disclaimer I can make to that is because of technology, a lot of the traditional setups that we have are actually changing. So you will find that, for example, someone would develop an app, speaking to the question from the diaspora, can I invest in shares? So you might find that someone would develop an app that allows you to invest in shares, and you're probably not even talking to any broker or anybody. All you're talking to is this app that's got a robo-advisor, and the robo-advisor tells you today Google shares are the best, or Amazon or Zambif are the best, and you buy. So in that scenario, it almost appears as if there are no brokers. But the truth is, behind the app, there are actually brokers that are actually monitoring either manually or using technology your orders and still playing this intermediation role as a broker and linking you to a market.
Okay, thank you so much, Mr. Nonde, for that. So Jackson is asking, can we give an example of the brokers that are available on the market?
Okay.
For this one, I've had Sichani type in the names of the brokers in the chat, so you will be able to see the names of the brokers that will be posted.
Yeah.
And then Tepa has a question: how does transfer of shares to children? How does one transfer shares to children when they become of age? Is it possible to sign your children as beneficiaries when purchasing or signing up for the shares? Joseph, could you guide us on that one?
Well, thank you, Study. Yes, these shares can be transferred to children. Of course, what needs to be done is basically just when they become of age, then they have to submit KYC, like we said. Then the change can be done, and then the amendment in the orders of record will also be changed, such that that account will have the names of the beneficiaries listed on them. So you can actually hold shares in trust of children.
Okay, that's a very interesting fact. I hope that's quite beneficial to the public and gives a response to Tepa's question. I'll allow for some hands to just give us their comments before we continue with the questions in the chat. I saw a hand from Pelly. Pelly, if you could go ahead and make your contribution.
Hi, thank you so much. Are you able to hear me?
Yes, we can hear you.
Okay, great. So I've got one question, but which has multiple dimensions with regards to the application, the mobile application for the Luce. So I understand the mobile application has changed from the old one. There's now a new one, which is called Luce Mobile from the My Luce. Who is responsible for migrating that information that was on the old app onto the new app? Because I've lost all the transactions that I had on the old app. And when I logged into the new app, I noticed I'm not able to edit my profile. My phone number is not there. My wallet is empty. And none of the transactions I had were there. Then secondly, I just want an explanation on what a partial trade is, because I had a transaction that was seated partially traded for over 3 months. And then after it migrated to the new app, it's not there anymore. So is there an explanation that I could get for that?
Okay, thank you, Pelly, for that question. I'm not sure if we have anyone from Luce. Do we have anyone from Luce in the meeting to just attend to your question, the first part of your question?
Stal, if there's no one, I think we can
There's
still
no one?
answer it.
Yeah, okay.
Yeah. So Pele, the first thing I just want to say is if you could also contact us after this town hall with your specific query, or indeed if there's anyone else on the call who's had challenges with the app, I think would want to hear from you. Because remember what I said at the beginning of the presentation, that the reason we're having the town halls is also to get feedback from members of the public in case you have any burning questions. So in terms of them, just to answer your questions quickly. So in terms of migration of the data, that is really Luce's job. And if you look at the app, the reason it still says under development is because from a regulatory point of view, we still want certain things put in place. So it's still pretty much in a testing phase, as it were. So we still expect things like migration of data to be done properly, validation of transactions to be done properly. You're talking about your transaction history being lost. So that's something that would also expect that is properly captured when the migration happens. Then just to touch quickly on what you meant as a partial trade, I'll attempt to answer it generally because I don't know the specifics of your of your particular scenario. But what we tend to see when we are reviewing some of these transactions is, for example, you would ask to buy 1,000 shares or sell 1,000 shares, depending on whether you're buying or selling. But for the transaction to go through, remember it's a buying and selling transaction. So your shares have to find someone who's matching the terms of your offer. So if you're buying 1,000 shares and you want to buy them at 25 kwacha, it means that the brokers that we were talking about will market your shares and say there's someone wanting to buy 1,000 shares at 25 kwacha for this particular company. So somebody on the market has to be there to say, oh, I've got somebody also looking for 1,000 shares and willing to pay 25 kwacha for those shares. And so what that means is then there's this agreement in terms of the buy side and the sell side, and that order is matched. So it means that your entire 1,000 will be sold. Now let's suppose that your broker is only able to match someone who can sell, say, just half of that quantity. So meaning that your order will only be matched up to 500, and the other 500 shares, it means that they will be pending. So you won't get the money for the other 500 shares because they haven't been matched with a corresponding order on the sell side. So that's what we see on the what's happening with the partial trades. So the order types also determine whether or not your order actually goes through. And perhaps we can use this opportunity to say that it's not automatic that when you put an order on the market, that order will be fulfilled on that day. It might actually take a bit of time before you find a matching order, so that then your transaction, whether you're buying or you're selling, actually goes through.
Okay. Thank you, Mr.
Joseph, you wanted to add something?
Nonde. We have another question from Mondwa. Joseph?
Oh, yes. I wanted to just add what Mr. Sichilima was saying in terms of matching, because I think part of the question was that that partial trade, the residue took long to trade, and has taken long rather because it hasn't traded up to now. So like Mr. Sichilima was explaining, mostly what would also affect the time it takes to match is the quantity of the shares that is remaining. But obviously we don't know the details of the query. But then if it is a very small number of shares that has remained, I think the old system used to put it in the old log. That was a very difficult part of the trading, where when you have, let's say, 5 shares or 10 shares remaining to trade, it becomes very difficult to transact to match such kind of trade. Just wanted to add that aspect as well.
Okay. Thank you, Joseph. We can take one more question from the chat. Mondo asks, what happens to unclaimed dividends? And then he's got 3 questions. How easy is it to sell shares on your own? And what's causing the slow or no volatility on most of the share prices? So the first one is, what happens to unclaimed dividends? Mr. Nonde.
Yeah, okay, thanks for that question. And I think it's also a very good question, because from this town hall, we are hoping that people will actually become interested in buying shares. And going forward, remember Joseph talked about monitoring your investment. So one of the things that you need to be doing is looking at the performance of your company, looking out for announcements. When they say we are now paying a dividend, they normally say a dividend of X ngwe per share and so on. And what we have seen is there is a lot of unclaimed dividends on the market, as in they run into literally millions of kwacha. And we are wondering why citizens are not getting their money. So what the law has done, and this is also, it's not peculiar to capital markets, is if you have any unclaimed funds, ultimately the law requires that those revert to the state. So what they'll do is they'll prescribe the periods within which the unclaimed dividends can remain with the company. And after a certain period, those dividends are then transferred to the commission. And for the commission, I believe it's after 15 years, they are transferred to the commission. And the law specifies that those funds will then be used for investor protection activities. Yeah. So the money will not be used to pay things like salaries and wages and other things. They'll strictly be used for investor awareness campaigns. So after 15 years, the company is mandated to transfer any unclaimed dividends to the commission, and the commission then puts those in an investor protection fund. Okay. And I think within that period, once it's transferred to the commission, I think there's still another waiting period. So individuals that have that suddenly discover that they've got unclaimed dividends should actually have a window to actually make a claim, either on the company, or if funds have been transferred to the commission, on the commission. The other one, I think we've answered it. How easy is it to sell shares on your own? I think it's very difficult. That's why Joseph and his colleagues exist as brokers. They are there to make the work easy for you. It's very difficult for you to sell the shares on your own, because how are you going to know who else is looking to buy shares on the market? Unless you have a friend or relative who's selling it and you bump into them somewhere and they tell you, I'm looking for shares, and suddenly you actually saw them. The third one, I think this just speaks to market conditions. You really have to pay attention to what's happening in the environment, as it were. So you might have major events that are happening in the economy. For example, I can give an example of just two major events that would have an impact on share prices. We had COVID. We also saw what happened to the market. So certain companies were really hit hard. So your hospitality sector was hit hard. Your banking sector was hit hard. So those are the things that cause prices to really become volatile. So it's really the fundamentals, anything in the fundamentals that would really cause volatility. The experts would really dig deeper and really tell you exactly what's causing a share price to go up or down. Thanks, Tidale.
Okay, thank you. Unfortunately, we have run out of time, so let me just do one last question, then we can close the meeting. But what we're going to do, all the questions that we have posted in the Q&A section, we will respond to them. The presenters will respond to them, and then we'll send them to all participants via email, because we do have your email contacts, all of you present in the meeting. So the last question I would like us to answer is, where would you advise be the best platform to use to be on the lookout for available shares on the market? What platform would you advise? I think, Joseph, that would be for you. If someone is trying to be on the lookout for shares, what platform would you advise them to be on?
Thank you very much, Tidale. Well, there is quite a number of platforms that provide such information. Start with the LUSE website. It provides quite insightful information on the trades that have taken place, I think even on the daily basis. And if I'm not mistaken, they would update that information maybe weekly or daily. But there is actually information on the shares which are available, and also the bids, or the people that want to buy the shares. That information is also there. And I think also the different brokers provide such information. So if you you have a broker. That is the best source of information for you to get any activity that is taking place on the market, because the brokers are viewing the market every day. They know what's happening. They know the latest information, and they're the best to advise.
Okay.
Thank you.
Okay, thank you so much, Joseph, for that. And also maybe just to add to that, we do have, the LUCE does have what is called the SENS, that the Stock Exchange News Service. So the public is free to subscribe to this service. Then you'll be getting information about what's happening in the capital market, what's happening on the stock exchange, like Joseph mentioned. And then also, if you notice, if you've joined any of our market development or awareness campaigns, or if you've attended any of our meetings or the shows, exhibitions that we have, we usually encourage people to be what is called a smart investor. So as a smart investor, you need to keep track of your investments. That's how you're going to have a situation to get rid of the situation of unclaimed dividends, because you'll be able to claim your dividends. You'll be keeping track of your investments yourselves and know what rights you have as a shareholder. Okay, we've come to the end of our meeting. Unfortunately, we don't have much time. It's been a very interesting one, I must say, and I'm pretty sure from the comments that I've seen and the participation from the audience, it's been really interesting. I want to just thank you so much, everybody, for joining us, for finding time in your schedules to be part of this town hall. And would like to extend the invitation for you to join us next month on the last day of September for another interesting town hall, where we'll still be talking about your investment options in the capital markets. This time, we'll be looking at collective investment schemes, and we'll have another team of very well-vested presenters to talk about the topic at hand. Thank you so much. We'll see you next time.
Thank you, Stali. Actually, I noticed that there's someone who's been very happy investing from the comments. So we have an ambassador.
Interesting. Thank you.
Thank you so much, Stali.
Thank you, Joseph, for the presentation. Thank you.
Thank you, Mr. Sichilima.
No, thank you, Joseph. It was very insightful, even for me.
Oh, sure. There are quite a number of interesting questions in the chat. Yeah? Had we had enough time, it would have been nice.
Yes, so what we're going to do, we'll copy them, Joseph, and then we'll send them to you and Mr. Nonde via email so that you can give your responses. Then we're going to circulate them to everyone who was present in the meeting.
Yeah, okay.
All right.
Okay, good day.
All right, thank you, good day.
All right.